Welcome in. This is the Thursday deep dive. Sorry for the hesitation there. We're recording on a different day, so our schedules are all messed up, but we're talking Evolution Gaming today. I'm here with Ian Gray and Ryan Henderson as always. Guys, how we doing? Ian, you're heading out of spring break. Exciting to get away from us for a little while, get to the sun. Yeah.
Yeah, for sure. We've been up in the cold for too long and starting to need to warm up our bones a little bit. So I'm going to go try and find some sunshine.
All right. And we're going to be talking Evolution Gaming. But before we do, Ryan, do you want to talk about 7invest or should I?
Sure. I mean, they still haven't announced that seventh member yet.
They still haven't. We're waiting in high anticipation. And we're actually, when this comes out, it'll be right after the new March picks. So perfect time to sign up. You get $10 off with our code CCM. So it's only $7 to try it out. You can see all their historical picks. I don't know, 7 picks for $7 seems really smart to me.
Yeah, I mean, they crush the market, so
they do a heck of a lot better than we have, but
Yeah. All right, should we get this thing started? It's code CCM. But yeah, I'll talk about Evolution Gaming Group. And if I'm not clear on sort of how the business works, just let me know. But basically, they develop and then they license live casino solutions to gaming operators. So they have these studios. I guess there's two components to the business. They have sort of the more traditional games, and then they have the live casino solution, which is more, think about like the Peloton studios, how there's like those people that are actually riding the bike and they're doing all the production part, and then it's getting streamed to all these different people. That's kind of what the live casino solution is like. And so, but Evolution Gaming is selling to operators like DraftKings, Hard Rock Casino, PokerStars, Penn, and those companies are the ones that actually interface with the customer. So they're the ones that actually have the connection to the end user. Evolution Gaming Group is just licensing out their service. I guess you could call it. I mean, it's not necessarily software exactly. It's kind of half. It's like a service, full-on casino solution. And so the live casino solution, it's like if you logged in, you would get a real dealer dealing real cards, but there's infinite seats essentially at each table. I'm not sure if it's actually infinite seats, but there's more than like 5 people at a table, whereas a traditional casino, you only have so many seats. The seats are digital. So you can kind of get a lot more bang for your buck on each table. And then it's actually kind of cool to watch. So you can go to YouTube and watch sort of how this works. But the bets are digital. The dealers are real people, and it's basically in this large studio that they have set up all over the world. They have a bunch of different studios, and there's just a bunch of different tables, and they're dealing it, and it's getting essentially live streamed. And then the operators use an API to sort of embed that live stream into their gameplay. Does that kind of all make sense?
Yeah, it makes perfect sense.
Okay, and then some of the games they have include slots, Mega Ball, live roulette, live poker, live blackjack, Monopoly Live, which I think that is their proprietary game. So that's one that they have that other gaming developers
they came up with.
Yeah. Right. And then they have like Deal or No Deal. They have, I believe, more than 40 games, and they probably do now they just acquired NetEnt, who is the big slots provider for, I think, more than $2 billion. So they are the biggest casino solution provider in the world. I think
we'll get to the industry, but I think we have one that's bigger, but in revenue. Yeah. Market cap, I think Evolution's the biggest, but.
Okay. And then history, Jens von Baar first founded Evolution in 2006. I think there was actually a co-founder involved there as well, so I might be missing him. But the goal was to revolutionize the European live dealer platform. And mobile gaming wasn't actually introduced until 2012, but I think mobile gaming now makes up more than 65% of their revenue. And they went public on the NASDAQ in Stockholm in 2015. There was like a different type of exchange they went public on. And then they also listed on NASDAQ Nordic in 2017. And they're actually headquartered in Latvia. And they employ about 9,500 people. Those are included in all the studios across Europe and America. I guess, how they make money. So they typically have 3-year contracts with the casino operators, but then they also have a 10% take rate on however much the casino makes off the gambler. So If, by the way, there's a really good report out from Alta Fox Capital. They bought it and did like a whole 9-pager on it. And so they go into depth on it. So if the casino ends up taking $10 from the gambler by the end of the night, Evolution gets that $1 kickback. But if the casino loses money to the gambler, Evolution doesn't lose any money. That's just the loss for the casino.
Right. So, yeah, that makes sense.
Kind of favorable economics there. But do you want to get into the industry landscape?
Yeah. So competitors are going to be mainly in Europe. We're not seeing many U.S. competitors out there. There's a lot of, up and coming consumer-facing brands, but on the technology side, it's really a lot of European companies. There's Betson AB in Europe. They have almost $1 billion in sales from what I saw. There's Leo Vegas, who is a lot smaller. All three of these companies are listed in Sweden, I believe, but I guess Evolution is actually based in Latvia. Playtech has a $1 billion market cap and is actually supposed to do more sales than Evolution Gaming in 2020, I believe. Let me confirm your earnings numbers. Yeah, because it's supposed to do more than $1 billion in sales, but it actually has a way smaller market cap of only $1 billion versus what is Evolution at, about 28 billion enterprise value. BetConstruct is another competitor that's UK based that provides some software as well. They do about $600 million in sales. So you can see it's not a small market. There's quite a few, there's a lot of dollars flowing around this, especially in Europe. The global online gaming market is valued at about $54 billion. I believe that was in 2019, and it's expected to grow at a 10% CAGR over the next, I think it was like 7 years. You got to take those studies with a grain of salt, but you can see that the U.S. is probably a big growth driver. European is more mature. They kind of have more. If you're a U.S. investor, you probably know that it's more of a black market, or at least the last few decades, it's kind of been a black market online and offline stuff outside of Vegas and Atlantic City. But now everything's getting more legalized, so that's going to be a big tailwind for the industry. Legalized sports betting seems to be hitting an inflection point in the U.S. Will there be a benefit to Evolution as a collateral right now to bettors? For example, Penn National has seen a lot of growth from that Barstool acquisition and DraftKings and FanDuel and stuff like that. Right now, Evolution, if I'm correct, does not do sports betting, but a lot of the companies they work with are getting a lot of, surge in customers doing sports betting, and then they can come to those, casino products. Does that make sense, or am I off base there?
Yeah, no, they are partners with DraftKings and
FanDuel. And
FanDuel. Yeah. But just to make sure I clarify, this is more traditional casino gambling, not sports betting. It's like I'm playing poker, or blackjack, or roulette, and it's like you're in a casino, not just betting on games.
Yeah, but the thing,
they don't have that yet.
I think they could in the future. They don't have that as a current product, but I think a lot of people think that if all these bettors are coming onto these properties to bet on sports, eventually they'll move over to some of the other casino products. But next we got management. So Ian, you want to take it away?
Yep. So as Ryan mentioned, Jens von Baar is the co-founder, president, former CEO. He's also the current chairman of the board. But in 2016, this guy named Martin Carlson took over as CEO. The stock's up almost 2,000% since he took over. So pretty impressive run. Yeah. It had only been public for a little bit before he took over, but if nothing else, he has done a good job. It's no shareholders, I would imagine, are unhappy with him. He talks in interviews about wanting to, quote, be the best company in the world. But he also kind of stresses the importance of staying humble. They're not there yet, all this type of stuff. But he really is committed to excellence. And that's something that I really like hearing CEOs talk about excellence being great, and just whether it's operationally or in their vision, that they just really want to be the best. And so he seems to have some big dreams, some big vision, and he's been executing on it well so far. So we'll see how it goes from here. But I'm pretty interested in kind of following the CEO and hearing more from him. There's about 10% insider ownership in the company. Most of that is from members of the board and independent directors, basically. And then about 39% institutional ownership. So quite a bit of ownership by the public out here. And so still some kind of, we might see some more institutions jump in. BlackRock has a little small position. Vanguard has a small position. All the kind of typical names are at least have their eye on this one. So something that's on the radar.
Right, right. Yeah, I mean, nothing, I don't know. I see nothing crazy on the insider ownership. Seems pretty standard. Yeah, I mean, when management does talk about customer focus and stuff like that, that can always be a good sign. You got to hope they actually execute. It seems like Evolution is doing that with the growth they've seen.
Yeah, and I would also add. So I watched a pretty long. I think it was the CEO. He tried to do one of those like Steve Jobs like presentations, where they like
Yeah.
have the lights shining down and they always talk really slowly. But he did seem very focused on innovation and kind of not resting on the laurels. I know they have, as far as new games they've released, they've been sort of at the forefront of that. I think they released 12 in 2019 and then 9 in 2018. And they've just like kind of been innovating at a much quicker pace than a lot of these other live casino operators.
Yeah, I mean, their product launches have been quite impressive.
Yeah.
Yeah. All right. I'll get into the valuation. Just hit this quick. Ticker in the US is going to be EVVTY if you're going to buy this on the OTC markets because it is listed in Europe. Enterprise value is about $27.2 billion at the time of recording, but so it's going to be about a week away from when you're listening to this. So the stock's a bit volatile. So make sure to check and update these numbers. EV to sales is about 40. However, their profit margins are really, really strong, which Ryan will get into next. So their EV to operating income, while still high, isn't insane. It's about 75. And then EV to operating cash flow is similar to that. So 75 is very, very high. But with their profit margins, it shows that they're likely not, they're pretty far off from what their probably terminal sales multiple will be, but they're not as far as a company that is doing, 40% gross margins when what Ryan, you're getting into the earnings next, they do what's 50% plus profit margins.
They do. Yeah. So also, if you're seeing, you mentioned the ticker EVVTY. The popular ticker is EVO. So if you're on Twitter, that's what's being referenced.
Yeah.
But yeah, as you mentioned, they are really profitable. Probably one of the most profitable businesses I've ever looked at. But so their 2020 revenue was 682 million, up 53% year over year. And Europe accounts for about 60% of that revenue. Asia's like 24%, and North America is smaller, but it also doubled year over year because we're seeing it's sort of becoming destigmatized in America, or at least across the States. And then they had 364.4 million in operating profit. That was growing 90% year over year. So their operating margins were about 53%, and that's been increasing rather quickly. And a lot of the people that are bullish about the company talk a ton about scalability, and the more operators they sign on, it's just they don't have to add tables to add customers. So that's kind of the benefit of their scale. Like you can just, as you have more customers, the tables become more valuable. And so, yeah, operating margins 53%, net margins 51%. That was up about 90% year over year. And then 51% of that net profit gets paid out in dividends to shareholders. And then they acquired NetEnt, which became effective December 1st for 2.7 billion all in stock, which I don't mind if you're trading at 70 or 80 times operating income. Use that stock as currency. And then diluted share count increased 7%, but all that really was attributed to the NetEnt acquisition. If you backed that out, I think it was obviously much lower, but it was not above anywhere like 5%. And then I thought an interesting note here, they record the value of customer relationships, the value of software, and the value of their brand all on the balance sheet. I don't know if that's a formality that they have to do.
I didn't ignore that, I get, right?
Yeah, I don't think they were. I think they were doing it because they have to. But I guess you can touch on it, Ian, balance sheet and liquidity.
Yep. So before diving into that, I'll hit the high level stuff first. So we've got about $270 million that's in US dollars. You want to check that. I think their currency, like their market cap, sometimes is listed in Norwegian dollars, maybe.
No, it's Swedish, right?
Swedish.
I don't know what it's called.
I thought it was euros on the.
Or no, euros.
It's euros on the. So it's on the balance sheet and like their financial statements and stuff. It looks to be euros, but I think whatever like their market cap is listed, because I think we said they were in Norway. is where they listed on the first exchange. So anyways, you just want to check out the currency stuff because the currencies are a little bit different. So anyways, in US dollars, it's $270 million in cash. No, what I would consider true debt, but about $61 million in leases. So big net cash position. And one interesting note about the leases is this kind of indicates to us that they don't actually own their studios. They lease them out, which helps keep the model a little bit less capital intensive. They don't have to buy big studios and all that type of stuff. They probably get tenant improvements too. And so don't have to spend a whole lot of money into improving the studios or things of that nature. They probably get some help from their landlords. But anyways, they've got a lot of goodwill, as Ryan just mentioned, related to the acquisitions. About 60% of assets is related to basically this most recent acquisition. So keep an eye on that. It can, if the acquisition doesn't pan out, that can be a hit to earnings, all that type of stuff. But at the rate they're growing and they're excited about the acquisition, it should be fine, but something to be aware of. As far as the value of customer relationships, value of software, all the brand and stuff, it seems like sometimes these types of companies, especially when they're making big acquisitions and they're trying to raise money, they'll include stuff like that so that they can get that basically serves as more collateral for or not collateral, but more what they would consider real value that they can show to the banks or be a part of these types of acquisitions. Just that there's probably some value there. We don't really care about it as investors in terms of like dollar amounts on the balance sheet, but for people who are more financiers and helping do some of these M&A deals, having some sort of number value on some of those relationships are, it helps get the deals done.
Yeah, I guess with our goodwill too, you can tell if they start writing it down, it's not going to impact the cash they're generating, but it'll show if the net ent, is it called net ent?
Netent.
Net ent, kind of a weird name, but entertainment. Okay, that makes sense. But yeah, if that shows, if they're writing goodwill down, it shows that the acquisition isn't working out like they thought.
Right. And it shows that it's not working out as they thought. And some investors who care more about things like PE ratios, I know that's so old fashioned today, that'll drag down things like earnings, drag down those types of things. So like you said, not a cash expense. And so it's not, not concerning in terms of liquidity or their ability to run their business or anything like that, but it can spook investors.
Yeah.
I appreciate the attempt at valuing the intangibles, but it's like impossible to quantify. So it feels like they have to know the customer or shareholders are like, we don't care.
Yeah, as an investor, I really just gloss over that stuff. It's kind of like adjusted EBITDA. You just kind of just ignore it. But that's it for the first half. We're gonna take a break and then hit competitive advantages, future growth ops, and highlights and lowlights. Welcome back. Next up, we have competitive advantages, but during the break, we had Ryan wanted to make a point or correction.
I was just reminded of this, but Ian, you touched on the studios part because that's really their lease liabilities, and I believe I saw somewhere that in the U.S. you have to have the studio has to be in the same state that it's been legalized in.
I think that's true. Yeah.
So I wouldn't be surprised if they were a little picky in where they chose to lease out studios in the States, because if they're not going to get a big enough market share in certain states, or it's not going to be worth the ROI, I'm not sure they'd want to open a studio. But anyway, I just thought that was worth throwing out there.
All right, competitive advantages now. Ian, what do you got?
Yep. So I think one of their main competitive advantages is their existing infrastructure of these studios and the employees there, the dealers or whatever type of live employees they have. Many of the innovative players in this gambling space, the sports space, or the gaming space, they're trying to stay pretty asset light. And Evolution has figured out a way to kind of do that while still, by leasing out these facilities. But they still have this huge expense for all the employees of these places. And so it is a bit of a big investment to build out the studio network. And like Ryan was saying, even further to this point, is that in the US, having to have a studio in the state where you're where the gaming is happening and where it's legalized actually makes it pretty difficult to build a big network. And so they have a little bit of a head start there on a lot of people. So having this existing studio, I think, provides at least a short-term competitive advantage.
All right, Ryan, what do you got?
Mine's the proprietary games. So Monopoly Live is one. And then if you go to their investor relations page, they list out all their games. And I think they say which ones are proprietary. But some of Evolution's most popular games belong solely to them. So that Monopoly Live is a really big one. I saw that, like, I was looking over YouTube videos and people were like, a lot of people were sort of fanatic about that one. And so that kind of presents a problem for the operators. So if Penn National Gaming has all the, and maybe they're a bad example, but if someone's got all these customers that are using that operator to play the online games, and they're big into Monopoly Live, and then whoever that operator is decides to switch to a different live casino and they can't offer Monopoly Live, it's really not that hard for a customer to say, okay, whatever, I'll just go to 888 Casino or whatever, and so that I can play that game. Like, it's almost a commodity service in that regard, from the operator side, because it's really not that hard to churn or switch between apps.
Yeah, that is true. That is true. The Monopoly Live. The only pushback would be that it doesn't seem like, and I haven't seen the game, it doesn't seem like a game that's that easy to build something that's similar, but no one really has yet. So it's like, all right, I mean, someone could create a copy of plenty of games. Maybe there's some sort of brand there.
Yeah, and I would say there's also a lot of them. It goes beyond just Monopoly Live. So I think being on the forefront of adding those new proprietary games is going to be big as well.
Yeah, that could be. Mine, I mean, I don't know, maybe I'm not getting it, but I couldn't find any I thought were that strong. I mean, the economies of scale makes sense to a point, but there are a lot of competitors out there. Maybe Evolution just has the best management, the best product offerings, but I don't think that's a competitive advantage. It makes them a good business. I mean, they probably have high switching costs. And the scale is, the scale thing is there. There is some upfront investment, especially through all the states. I don't know. There's a lot of the bull cases kind of right around the competitive advantages. I didn't really, I don't know. Maybe I need to read more. I really didn't think they were that strong. The business looks great, but I don't know if the actual business model gives them anything unique, because there's a lot of competitors out there.
Yeah, but I think the it's like the Cash App, the combination of all the unique features, because there are these smaller unique features. They have all the proprietary games. I do think people start to get accustomed to a certain dealer, which belong to Evolution Gaming. A lot of this stuff is what Alta Fox had on their report as well. And sort of all of those just give more reason for the operator to re-up their contract with Evolution. So it's not necessarily always the end user and how they interact with it, but how much does the operator need Evolution? Yeah. I think those kind of combine to make it pretty necessary to use them.
I mean, I don't know, maybe they have the best offering. I don't know. It just seems, it's not like there's anything, I mean, it's copyable. Maybe it feels like maybe I'm making like that, Google can just enter that tech, thing. Argument. So maybe that, maybe I'm thinking that it's too copyable. You know what I mean? When people are like, well, Google will just copy that, or Facebook will just copy that. Maybe I'm making that argument too quickly. So I could be wrong. But Ian, what do you have? Anything else on competitive advantages?
I think you're right that there's some questions about whether they really have strong competitive advantages, because like you said, there's some pieces of it seem fairly copyable. I think some of the things that Ryan's brought up, like the relationships with the dealer or some of those more kind of personalized things, do provide some competitive advantage. But I don't think this isn't a business I look at and go, wow, look at this incredible moat they have, right? I think they've got a little bit of a head start, but more of a head start than a moat necessarily.
No, it doesn't make it a bad investment or a bad business. Like, their execution has been phenomenal.
Yeah, I'd also add that it might be a rising tide that lifts all boats. The switch from land-based to online, if you're deliberating over moat between one or the other, and they all end up benefiting from that tailwind, it might not matter that much.
Yeah, true. Very true. Next up is future growth opportunities. Ian, what do you have?
Yep. So the way I'm kind of thinking about this is they have this existing network of studios and relationships with the casinos and with their customers. And so with the rise, particularly in the US, of sports gambling, it seems like they should have the opportunity to do some sort of live sports gambling offerings, and that they have this advantage against some of the other players, like we talked about Fubo a couple months back. It seems like Evolution, with all these studios, they could do some sort of live sports gambling shows, or be going through like the different types of prop bets that you might see, or talking about, even jumping between, the end of games, saying live end game bets, kind of being able to like guide people through the experience a little bit. Because I think one of the things about sports gambling that some people like is kind of that community feel of it. And especially with COVID right now, there hasn't been you can't go to the, bar in Vegas or the casino and make your live sports bets and all that type of stuff. And so ways to do that virtually, I think, is probably an opportunity. And it seems like lots of people are trying to kind of get into that market. And it seems like they have a little bit of an advantage here, having studios and having talent that knows how to engage people digitally. So anyways, kind of, I don't know that there's any movement on that front, but it'll be interesting to see if they go in that direction at all.
Yeah, I am. It feels like that's a logical next step. I'm just curious sort of how that would play out, and if there's any friction between them doing that, being that they're partnered with a lot of those big sports betting companies
who already have their own apps, but they can bring the technology in there.
If the app,
right, if just like they developed the Monopoly live game, if they could somehow get some people who are actually, well, and Barstool's doing it kind of like with, personalities like Big Cat and Dave and all sorts of people. Like if they could actually develop their own personalities in Evolution Gaming and license out their show, basically, and whether that, and you could license it out to these casinos who could then, include their own betting platform, but using their show to kind of drive bets. I don't know. I think there may be some sort of opportunity there for some live talent.
Yeah, I was skeptical when we were reading or looking into Fubo about their claims of getting into sports betting and all that stuff, because there's that rights issue, and no one's going to Fubo when it's kind of a commodity product. You really got to have the personalities there. But if anyone is going to power the back end of that, it seems like I would think it would be Evolution Gaming instead of Fubo. Although I don't know if that idea is really that sound in general.
No.
All right, Ryan, what do you got?
For me, it's going to be secondhand content, and I'm not exactly sure how this would be monetized, but it feels a little bit like, so I looked up YouTube videos of people essentially interacting with the Evolution live casinos, and it's like these popular gamblers, and they have thousands of followers. So a little bit like video gaming in that sense, how they can get a big crowd behind their gambling. So whether it's Twitch or YouTube, or I don't know what else people use these days, finding a way to maybe monetize that or partnering with them, because I feel like that's going to be a big avenue and a place where a lot of people go. I never thought a lot of people would watch other people play video games, but I could see, now that I've watched that play out, I could see people watching other people gamble.
Yeah, it's tough to see how Evolution would monetize that, but I think they could figure something out.
Yeah. Ian?
Do you think that there'd be opportunities for them to do something kind of like, I think what we've seen with Skills too, like do some of these types of tournaments, or if they have these personalities on their platform, even if that aspect of it is free, is that then they can say, look at these big sports gamblers who have these big followings, or whatever type of gambling it is, and actually run sorts of live shows of like a little bit of maybe the new version of like a World Series of poker or something like that, right? That instead of all these kind of random poker players, it becomes the people who have these large followings because they're entertaining, because they're good for whatever reason, and that they might be able to become a little bit more of a media company in that sense. I don't know if that's something they're interested in, but it might be one way to monetize that idea.
That's interesting. It's interesting. All right, I'll hit mine. I took the easy one. All the daily fantasy and sports betting apps in the US seem to be expanding to casinos, and they're all using Evolution's product suite. FanDuel is a recent announcement they had in the fall. They are getting whatever. They're doing some sort of casino that is going to be an expansion of their daily fantasy and sports betting app. I don't know if it's a separate app. I don't know anything about FanDuel, but that just shows that there should be a continued tailwind in the US over the next decade if they can keep providing to these operators. Because, I mean, how many states have actually like opened for sports betting? It's got to be less than 10, right?
Michigan just did, right?
And yeah, a lot of people are legalizing, but it takes a while to actually get the gambling going.
I know Evolution mentioned that they were going to build or lease out a suite in Michigan. I don't know if that stalled out, but you're right. I'm just wondering if how useful it is because it kind of diminishes the ROI per table if you have to build or if you have to lease out a studio in every state. But like,
if it's a big state,
yeah,
got a big metropolitan area.
If it's worth it, I'm sure Vegas is a pretty big market or something, Nevada, stuff like that. So
most states, yeah.
Yeah, I guess maybe if the market share is there, then why not? But
yeah. All right. Anything else on future growth opportunities, or should we hit highlights and lowlights? Okay, Ian, what do you like? What do you not like about Evolution?
Yeah, so I like the CEO. I like that the industry seems to be moving in the right direction. Should be double-digit CAGR growth for the next few years, particularly in the U.S. Potentially a little bit of insulation from competitors, just based on the fact that they do have these studios. They have a little bit of expertise. Like we've talked about, probably not a super strong competitive advantage, but at least a head start against some people. For the lowlights, I kind of worry. I wonder, are some of these big casino operators going to take market share by doing it all in-house? They have all these huge existing facilities. It seems like it wouldn't be that hard to start building out some studios within those facilities. And they already have relationships with dealers that they could find their best dealers and start doing digital tables. So I'm a little bit worried about that. And then also the regulatory environment. This depends on these trends moving the right direction in the US. And if something were to happen, I don't know what it'd be. It seems like it's an unstoppable train, but you are at a little bit of regulatory risk that things don't play out exactly as the market's anticipating here.
I'll tell a story, some anecdotal evidence that I don't know if this will probably make people bullish on Evolution Gaming, but I was with friends and we were doing, I assume it was powered by Evolution. They had some online roulette thing. I'll say as a value investor, I wasn't playing because that would violate whatever.
Wait, what state was it?
Well, they were in Washington, but they were using like a VPN or whatever.
Oh, okay.
I won't say who it is to get them in trouble. But so the roulette thing that's powered by these, video, whatever, it's kind of live. It's not just the digital click a button and see it. It is a lot better, but man, was it highly addictive for these people, and they were losing a lot of money, which is going to Evolution Gaming. But I think we need to be reminded of Robinhood, who is getting into trouble for doing something similar.
It's a sin stock. You could categorize it as a sin stock.
Yeah, I'm not sure whether Evolution will get in trouble because they're just the back end. I don't know. And then another thing with Ian's point, I do think that people might get like a big casino like MGM or something might get complainy and say like, why are we giving 10% to Evolution? But if the product's good enough, I don't know. But yeah, Ryan, do you want to hit your highlights and lowlights? Or?
Yeah, I think the more that I read up on it, the more scalable the business felt. They do have, and I know this was also from that Alta Fox report, but they have sort of that Netflix effect where when they introduce new games, because of all the players that they have, those new games become more fruitful and it's worth the innovation. And then also the fact that they're not confined to the typical table parameters of a traditional casino. And then there's also just the big sort of macro industry tailwind of land-based switching to online. So all those are kind of my highlights. And then lowlights for me, you're right. I'm not sure how much the studio aspect is copyable. And then, I guess potentially regulatory problems. I don't know. I didn't have that many lowlights. I guess sin stock, the fact that maybe it's not great to encourage everyone to gamble and it's making it really, really easy.
Yeah, it's using the Facebook level, tricks to get people to. I'll tell you, I won't say the amount of money people were losing, but I'm telling you, these people our age broke losing too much money. And I don't know how that ends well. So.
Yeah, but it's.
That's money.
It's an inevitability, right? I mean, people gamble all the time. Everyone's always gambled. That's the way.
Yeah. And I'd say I'm fine. I have no complaints, but when it's Facebook-like stuff and it has that, manipulation aspect, people do not like that. Regulators don't like that at all.
Yeah, I guess the only thing Evolution is changing is the barriers you don't have to go to the casino in order
That's
to throw
true.
your money
That's
out.
true. I guess
just
it's
gets
not
a little easier on your mobile phone.
Yeah, I guess it's not that much different than a regular casino. It's really not. So those will last forever.
Yeah. What about you?
I mean, I don't know. Margins are great. Management cares about the, correct margins. They're talking about cash flow and stuff like that and operating margins, which we like. They're returning capital to shareholders, although at this valuation, that dividend returns, aren't that meaningful. And the value proposition is there for their customers, and the huge tailwind in the US should continue. It feels a bit like a picks and shovels play, as many casinos seem to be entering this crowded space. I wouldn't want to bet on any of, FanDuel, DraftKings, Penn, or whoever, all those, Caesars, MGM. I don't think I would have any idea who's going to win that. But Evolution, if they're powering all these people, they're going to, basically be a monopoly in that. Low lights. The only questions I kind of had was 2020 an artificially strong operating environment because of COVID, and was the land grab with all these digital casinos sustainable? I don't know.
Yeah, it's definitely a question worth. Yeah, the COVID bump is definitely a question worth asking, because how eager are some of these people to get back into the casino? Yeah, I mean, that could potentially hurt them for sure.
Yeah.
But on the margins part, I think they said I think I saw somewhere that they wanted 70% EBITDA margins. That was their goal.
Well, I think we say sin stocks. That's just as good as chewing tobacco. Chewing tobacco is at 72%. So there'll be a competition between who can have better ones. Ian, anything else on highlights and lowlights?
Yeah, I was just going to mention one last thing. If you look at their returns on equity historically and their returns on capital and returns on assets, everything is super high returns. They do a good job of really, they're in the double digits at time. Before they made this acquisition, they were up at, I think, 60% returns on capital. So pretty incredible stuff. So definitely a stock that they're focused on generating shareholder value.
Yeah. And the more I think about the casino comparison, where I was kind of afraid of the regulators, I can already hear people that are Evolution bulls saying, like, I don't understand how that works because it's the same as a casino, but you have to ask yourself what regulators care about. Like, there's a reason they're not going after casinos in Las Vegas and they're going after Robinhood and Facebook because it looks good politically. You have to ask yourself, do these, online casinos, are they going to go through the same thing?
But it is it's the casinos, it's the operators that have that endure that regulatory scrutiny and not the back end.
Yeah, well, if FanDuel gets shut down, they're not going to, if FanDuel's whatever, like, little part, if they get into trouble, that's, Evolution's not getting that take rate.
Yeah.
Evolution's brand probably won't come to the forefront, but
right. The casinos are sort of the face of the problem.
Yeah.
But more or less interested.
Ian, go first. What do you think?
I'll say I'm equally as interested. We've been talking about the sin stock aspect earlier, and I tend to stay away from things that I feel like are making money off of other people's mistakes. Now, that's obviously a gray area, and you could probably argue that some of the stocks in my portfolio were really making money off people's mistakes as well, even, buying the latest version of the iPhone or things like that. But I think this is this is a situation like you're describing with these guys, people can lose a lot of money really fast that can't really afford to lose money. And it makes me a little uncomfortable to be profiting off of a stock that's doing that. That being said, I think this company has a really intriguing and compelling business model, and having that take rate, not the downside exposure of the casinos. And, I think it's a compelling business, but just not in a space that I'm interested in.
All right, Ryan?
Yeah, I think most people could probably tell I am optimistic about it. The economics of the business are really exciting, to not have the downside, but to have that upside and to have that take rate along with the 3-year contracts. It's exciting to me, and there's obviously the tailwind behind it. So I'm just gonna leave it at that. I'm optimistic. I like it. More interested.
Yeah, I'd say I'm more interested. Business model looks great. I was pushing back just to kind of get some of the, what do they call that? What's that? I'm losing the term.
I don't know. Just internally scrutinized.
Yeah, just to scrutinize for the show. But the business model is fantastic. I'm not afraid of investing in sin stocks. If anyone listens to the show, they know that we own Altria Group, so that's not a concern. I would just be, no one's going after cigarette makers. Yeah. They go after, like, vaping operators, if that's kind of the comparison you want to make. But valuation is a concern to me.
Yeah, and the valuation is sales multiples aren't made equal when you have, obviously. So when you don't take the sales multiple at face value, 39 times sales if they ever get to 70% margins is a lot better than some of the other ones at 40 times sales.
Yeah. But you have to think, what are they going to trade? I don't know, 15, 17 times sales? Still a lot of growth priced in at maturity. And I don't know. There's a lot more research you probably have to do before investing. A lot checks out. Probably have to watch management a bit, but I'm definitely more interested.
Okay. That's going to do it. Ian, you have anything else?
Nope. Okay. All right. Well, we got the stock for next week. It's my turn, and we are going to be doing Revolve Group. Favorite one of mine. Stock's actually been on fire lately, so we all know that stocks that have gone up recently do better. We get more listens on, so we're gonna hack it that way. But it's an interesting company. It's kind of like an online Macy's in a way. They sell like fashion apparel to mainly women and like millennial women. So
okay.
All right, that's gonna do it for this episode. Make sure to use our promo code CCM at checkout to get $10 off your first month at 7 Investing. Remember, Ryan and I are general partners at Arch Capital. Arch Capital may hold securities discussed on this podcast. We are not financial advisors. Anything we say on the show is not formal advice or recommendation. Thank you all for listening. We'll see you on our next episode.